Good morning. It's Merritt here with Apteros Trading. This will be the last DMI that I put out this morning until next Tuesday, the 6th of July. Going to be taking a little break, a little vacay, enjoying a long July 4th holiday here in the States. So, let's talk crude oil. All right, so yesterday we came down and we had this little confluent target area to then look for buyers to take control, right? So throughout the overnight session, there's just been a series of dips into that zone, including that final one right there, which was a biggie. And then finally, it's like the market was saying, have we run all the stops? No. They're still out there. Have we run all the stops? No, they're still there. Oh, yes, we got them, right? That's what that volume is at, 4:57 a.m. Eastern. So, nice stop run through the area that can lead to a change in behavior. So now we see more buying than we had seen all night long. We see weak sellers here most recently, and then buying continue into the hard right edge here. So this is a nice stop run through that confluent area that we highlighted yesterday, and now the buyers are really in control here. The chart looks nice, or the charts, I should say. I always use multiple time frames. The only thing that could really hold us down here, in my opinion, would be this 73.40. If this is just going to be more of a quiet, dull day, we'll see the buyers unable to really hold us beyond that. But otherwise, 72.50 is now bullish, and obviously the main bull zone, 72.70. Very bullish there. Could see, plenty of upside into kind of fresh highs for the year, I think, are very feasible. And so that would begin around here above 74.50. So plenty of upside on the table. Let's think about, here's the rotational scenario. That's going to be between 73.40 and 72.50s. Downside scenario, there's still downside in crude. Let's be honest. On the highest of time frames, for me, like a daily bar chart, there's still downside. We've had a big run up since mid-May. There's still downside. So what would that look like? For sure, we're going to have to be below this little confluent area, but really we would need to see some type of deeper excursion, perhaps down into this area, clearing all those. This is a very, very secondary, tertiary level here. I'm not very concerned about 72 as a whole. I know we did stop there low of day, but overnight, but it's not the most important level. So anything that where we push or get a really good push and start to hold below 72.30, that puts the bearish scenario on the table. Downside targets for there. We've got a little bit of support at 71.20, but really I'd look at perhaps let's say 70.90. And then, really, we've got a long ways to go till we get to some key inflections. So, like I was saying, there's a lot of downside in this market. Coming into the open here, I'm focused on the upside because that is what happening. Always trade what is. Don't get some idea in your head of what should happen or you want to have happen. Trade what is. We use the concept of acceptance as NADRO-based traders to guide us as to what is, if that makes sense, and where it changes. And it keeps us flexible, it keeps us nimble, and it keeps us in tune with what is rather than what we think should be or any of those type of conceptions that get in traders' way. So anyways, that's what I'm seeing in crude today.